It was a very strong year for equities in 2019, but we also need to be cognizant that the fourth quarter of 2018 was exceptionally weak. So a lot of the gains that we saw last year were catching back up from declines that we saw in the final quarter of last year, recovering lost ground. Regardless, it was still a very strong year. And it's one that was driven primarily by multiple expansion rather than by growing earnings. There certainly are companies and sectors that saw some pretty decent earnings performance, but generally speaking, stocks are worth more today than they were a year ago because their valuations have increased.
An inversion in the yield curve has historically been an omen of economic weakness or recession. It's been a fairly reliable indicator, and so investors were on their tiptoes in the third quarter as first the 1- and 3-month T-bill yields and then the 2-year note yield rose above the level of the 10-year yield. And that kind of inversion, I think, was spooking the market. I think the Fed was concerned by this inversion, and it's sort of in their wheelhouse and their job to control the front end of the curve. And they reacted aggressively. So the Fed brought down expectations for interest rates in the front end and allowed the yield curve to steepen in the fourth quarter, which I think has put some wind in the sails of the markets generally.
The outlook for monetary policy in early 2020 is such that the Federal Reserve will likely keep interest rates stable. During 2019, the Fed cut the policy rate 3 times, helping to reverse the inversion of the yield curve. We expect that the next meetings of the Federal Reserve will not include any major shifts in monetary policy, but will rather focus on supporting the repo market and market liquidity.
ESG is going to remain a very significant issue going forward in 2020, perhaps even greater significance, I would hope, of even greater significance going forward than we've seen historically because of the developments that have happened right around the new year, the just incredible amount of wildfires that have occurred within Australia.
As investors, we find it's increasingly important to subject all of our holdings and potential holdings to an analysis of carbon exposure, their carbon intensity, and how that relates to their peers and how it may impact the business going forward.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate, so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting www.sextantfunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Sextant Funds in a free prospectus or summary prospectus, please visit www.sextantfunds.com or call 1-800-728-8762.